Welcome, ladies and gentlemen, to Technical Market Insights, where we're not here to do anything or show you anything fancy. We like to keep it simple and we like to continually compound profits. Welcome to all my money makers out there. Make sure you subscribe. Today, we're going to go over some of the biggest winners and some of the biggest losers. We had a heck of a day in the market. As you can see, SMH's weekly chart is up, which, man, when I said those weekly charts would bounce, they sure did. Like, no, do not listen. That was an easy weekly play, and let's see what that would have got you on SOXL, because that's what we would have traded on SMH. So we were specifically saying the weekly charts are going to bounce over the last couple of weeks, and that would have got you 58% or 40. I'm sorry, 48% in 18 days, ladies and gentlemen. Please learn how to read a chart and know what you're doing. You can really have a huge advantage in the market. As you can see, I don't want to go over the general market, but SMH hit a new all-time high today, um, which is crazy considering everything going on around the world and just the overall dynamics. But we don't talk about fundamentals here. We talk about charts. And I am very glad to see that, even though I thought a healthy pullback on this monthly chart would have touched the 20 bar moving average right here, but it did not. But I don't think it's over with. I mean, this right here, ladies and gentlemen, be very, very careful buying here. I mean, this thing just since 2016 is up almost, well, really 550%. So that's one heck of a run. Don't get me wrong, it's been 8 years. Let's go here, and we got almost 300% in 5 years. Semiconductors are really banging right now, but just pay attention to the resistance, the monthly chart. We're going to swing trade anything that's over the 200-day moving average, and actually looking pretty bullish, right? We wanted to be oversold over the 200-day moving average. Now that can be determined on any chart. You can make weekly swings, right? And honestly, if I'm doing a monthly swing, we would have done XBY. We talked about this earlier, right? So just see, if you want to know what we think about the market, see some of our previous weekly analysis. I mean, XBY, you would have been an LABU for the month. So let's look at the weekly chart. So we called it here, huge support, right? If you look at the monthly and the weekly, a lot of support there. The chart's going to look different on XBY, and that's how we trade our leveraged ETFs. So that week, and then we actually called the daily. So you got to pay attention to all the separate videos to kind of see where we're going, because we look at multiple different time frames and we trade multiple different time frames. But we're not going to go over that right now. Market had a huge day. Trust me, I'm always happy, even though my trading account is sitting all cash, because we lock in cash when it's overbought, right? We lock in our trades, lock in our profits. But we have a long-term investment account that is continually taking any ups in the market in our benefit. So these are our bullish sectors once again. They haven't really changed. We're not doing an overall market update because we still stand the same on what we expect in the market. But let's go over some of our biggest winners, biggest losers. I'm going to pull up the scan. I don't know why I hit that. If you haven't subscribed yet, make sure you subscribe, because what we're going to do here soon is we're going to start an account in January on a kind of a small brokerage account, right? I think I'm going to start it with 2K, and I was thinking to add 10% of my income, but I'm thinking I want to add 20. I want to see this account grow, and I want to show people how your income is your greatest wealth building tool, right? If you can fund an account and then continually add to that account and then continually compound profits in that account, you can build wealth very, very quickly. So let's look at some of the biggest winners in the overall U.S. common stocks, which is about 6,300. Usually I won't touch anything that's in here. I won't say anything in here because if it's in the high cap 1000, it'll be in here as well. But we stick to the high cap stocks. We don't trade trash. But let's take a look at what popped today and what dropped. So we got BCDA, BioCardia. Who would have thought, if you've seen yesterday's video or any of the videos where we go over the biggest winners and losers, they're always biotech, mostly in the winner and loser area. Trading biotech can be very, very risky. Can pay off, but I can tell you from experience, been doing this for 23 years, you get in more losers than you do winners. My personal opinion. This is all educational purposes, so do whatever you please. So our biggest winner overall is BCDA, which is up 168%. Let's check out the news. Let's see here. What do we got going on? And FDA approved phase 3 trial. So they got, looks like approval for a phase 3 trial of a cardio cell therapy for treatment of patients with a heart failure. So basically, they got the okay to go into a phase 3 trial. Now I can tell you what happened, which probably has happened over and over again with this stock and a lot of biotechs is, okay, they got approval to start a phase 3 study. You understand how long that stuff takes? I mean, it can take years. In the meantime, this company's got to raise money, got to make sure they stay afloat and don't go bankrupt. They got to hope the results come in as expected, and then they actually got to get FDA approval. This right here would not surprise me if it's right back down here 6 months from now, if not lower, because there's nothing going on. Okay, now they're starting their phase 3 trial. Who knows what happened when it dropped 44% right here. Ladies and gentlemen, be very, very careful with this stuff, right? Understand this company, the chart does not look good. The company, yeah, they got okay for FDA approval to run a phase 3. There's companies out there making money right now that you could be invested in. Any of the speculative stuff, don't put a lot of money in, just my personal opinion. Oh man, I've seen this trending on StockTwits today. I believe this is what was, yeah, pretty sure it was. Maybe it was something else. I'm not even 100% sure. I'll check in a little bit, but I mean, this stock hasn't even developed a, let's see, been trading for 22 days, so it should have a 20-day moving average. I mean, this thing's, yeah, we're on our daily. So yeah, we would not touch this thing. I mean, Diesel Pete, some people bought this at, go to the high. Some people bought this at $570 and it's down to $12. Jeez, man, I really feel for whoever did that. Huge loss of your capital. Hopefully you get it back. And ladies and gentlemen, this could maybe this company is worth a run back up to 500. But you know what? I'm not taking that risk because it could also go down to $1.20 or in the pennies. I have no clue about any financials in this company, but if it don't have a 200-day moving average and it hasn't established a pattern for me to look at for how investors feel about it, I don't want nothing to do with it. This one right here, we're not even looking at. This means there's really no volume and it's a 2-cent stock. Look at our third. All right, this is a biological biotech company. Also hasn't been around for a while. Had a pop today. It could have just been with the normal trend of XBY and biotech in general. All right, so there's a couple people out there with buy targets. Piper Sandler starts a buy with 20. This is the same company. Look at my video from yesterday that was dropping some of their price targets on companies that was getting slaughtered. So I wouldn't take any price target from this company serious. Do your own research. Now let's take a look at the biggest losers. That's a penny stock with no volume. We're not looking at. Man, here is the Beauty Health Company. So as you can see, when it dropped under the 200-day moving average, whether it was back here or right here when it couldn't hold it, that would have been the time to get out, right? If we don't hold losers. Loser meaning if they can't hold the 200-day moving average, it's not in our portfolio. We like bullish stocks, which one of the rules for us, it being a bullish stock, is they got to be able to hold and trend above the 200-day moving average, and we lock in whatever we got to stay out from when it drops under the 200-day moving average. Whether it's profits or losses, you'd be down 92% from the first crash under the 200-day moving average. I like my money. I don't want to hold that trash. So guess what? I'm not. Let's take a look at the second one. Waste management. So far, I'm really surprised that the two biggest losers have not been biotech, but hey, I mean, waste management, people got to dispose of their waste, right? People get attached to companies. There's so many companies out there I like, but when I look at their chart, it's garbage. So I stay away, and it's saved me from so many losses. Talked about one of those yesterday. One of my favorite companies is down a ton from when it crossed under the 200-day moving average. So once again, if it's under the 200-day moving average, stay away. That's down 95% since it dropped. Trust me, you'll see a few that'll drop under the 200-day moving average and then just take off. And you sold when it dropped under the 200-day moving average. There will be a lot less of those than there will be huge losses. I can tell you that. So you can do whatever you want. It's your money. That's just one of my rules. Go over at my book with plenty of examples. If you haven't checked it out yet, you can go to makecashwork.com, and I actually got my main book available on the website, or you can just, the trader edition is only available on Amazon. What I mean by on the website is you can actually just read it right there. It's one of the pages. This is the third. Yeah, here's a medical device company. I mean, that's the thing. I've gotten excited about all types of companies, medical device companies, like robotic surgical companies, but this is what their chart looks like. I don't want to put my money to work like that. That's crazy. That's insanity. Let's go over to the high cap 1000 and take a look and see what we got going on there, because that's where we would be. SMCI, man, check out my website if you haven't. We alerted this company every oversold. I mean, I did an article. It was almost up like 300% from the first time we alerted it, which had to be like back here. But we've been buying the dips, oversold dips on this company regularly, and locking in when it's overbought and just keep on trending. This has been the PE, I believe, on this company was super high, so we kind of cautious there. But I mean, this is a swing trade over and over and over again. We would have bought when it's oversold, locked in 25% in 15 days. So it's really just hitting the overbought area. So yeah, I mean that was a buy right there. So you got to be patient. Just because it hits oversold, don't mean it's going right back up. It would have bounced a little bit. It would have dropped. You've been down 7%. All right. Some people would have been panicking. Oh my goodness, it's down 7%. The market's going to crash. No, that's when we scale in. We lower our moving at, or we lower our cost average, and then we lock in profit when it's overbought. That's how we operate. Affirm. I actually like this company, believe it or not. In my work environment, I actually had them come in, which I work for GM dealerships, and they were doing stuff with customers where they were taking over basically financing for some customers, and they actually had a better program out of some of the programs we were using. And the guy who came in just told me they basically just done a deal with Amazon, and that was actually before the news with Amazon hit. And I was thinking like, really interesting company. Maybe I should. I think that was like back here. Honestly, I'd have to look at it because it's been a few years, and I know it wasn't under the 200-day moving average, because I'm kind of upset I didn't take a little bit of that. But anyway, as you can see, it's one of the biggest gainers today. And I mean, the chart looks choppy. It's barely made some swings over the 200. So it's crossed back over then. But look at when it crossed under the 200 day. Ladies and gentlemen, that's what I'm talking about. When it's under the 200 day, wait for it to cross back over. It would have saved you 83% in a very rough year in that position. Even if you would have kept dollar cost average, dollar cost, I mean, you've been wasting dollars. So it crossed over, made a swing, touched the 200. That would have been a great oversold buying opportunity, and then it ran 70% in a month. Ladies and gentlemen, that's what we look for. We look for bullish stocks, bullish charts to start trending up. Obviously, we would have checked the PE, we would have checked see if it paid us a dividend, and to see if this is a company that we would like to hold over the next 10 years. I don't trade anything and I don't invest in anything if I don't have a good 10-year outlook on the company. It's just that simple, right? And what I do is I try to add a little bit of Peter Lynch, Benjamin Graham, Warren Buffett, but I add the technicals into it, and it, believe it or not, it gives you a huge advantage. I've been doing it for 23 years. I think 6 years ago, I wrote my first book called 17 Years of Stock Trading, What Works and What Doesn't, because I've tried about everything. And the strategies of the books I've released recently, I can tell you, are what works the best. So this company wouldn't have really made me want to put my money to work, but it was oversold right around there. I got overbought right there, so we probably would have locked in profit, which 15% in 8 days. Considering most people dream to get that in a year, not a bad little gain there. And let's take a look at our biggest losers. And look at that. That would have been, I like the chart, bullish looking, right? It's trending up and sideways and oversold. So sometimes these swing trades take patience. That's why we don't update we're not on here daily talking about what we think the market's going to do tomorrow. I don't have a tomorrow outlook. Okay, I have a month and 10-year outlook. Because my swing trades usually take a month, 2 months, and then I don't swing trade anything I wouldn't hold for 10 years. And I don't invest in anything that I don't have a good 10-year outlook in. So the account we'll be doing in January will be a hybrid. I'll be doing investment positions. I'll be doing swing trades. Kind of really excited about it because I haven't built up. Kind of excited, I'm kind of not, because when you're playing with big accounts, it just feels better. When you start off with a small account, even though it don't matter what kind of account you have, if you have $1,000 account, you better trade it like it's $1 million account. What I mean by that is percentages, right? If you go into a position, you only use about 10%, right? If you have $1 million and you want to buy something, you're not going to drop $1 million on a stock if that's your total portfolio. You'll probably go 100,000, and that should be the same if you got a $1,000 portfolio. You see something you like, something that looks good, something that matches your strategy. You want to keep it about 10, 20%, be $100, $200. That gives you an ability to manage that position and average down. So right here, when this hit oversold, if you had been patient enough, you would have had about 50% in a month. That hit overbought right there. So let's even just take it down a notch. 34% in a month. 50% in about a month and a half. And let's say you just went ahead and tapped out here. That wouldn't have gave you much at all. It gave you about 6% in 15 days. And right now it's one of our biggest losers, which, hey, we would already lock in profits. And if not, we'd be locking in profits today from down here. So definitely would have locked in profits on that candle right there. Not bullish at all. As you understand, studying charts is like studying investor psychology. It's like Psych 101, but on the investors. So once again, one of our biggest losers for the day. Oversold right there, really close to it. See, we like seeing them hit the bottom Bollinger Band, but that was a kind of a tight band anyway, so not a huge deal. Worst case scenario, you would average down. So let's look at this. Regardless, I don't sell till it's overbought. All right, so right here, stochastics was about halfway, right? It was 56. It dropped. That might have been earnings. I don't like holding through any events. Um, Sometimes I do. Depends on the situation. So you would have been down a total of 3% there. I probably would have, if I would have went 20% in originally, I would have won another 20% in on what I wanted to trade with. I've been at 40%. And it's not really a big swing. You're up 4% in 14 days. It's not a whole lot there. I don't like healthcare companies or medical device companies. One reason a lot of them is speculative. The other reason is they need you to be sick to make money, right? One reason I never short the market. If there's something I haven't touched on, probably that. You will never see me short in the market. For one reason, it's the negative mind frame it puts you in. And don't get me wrong, I've made money short in the market and I've made a lot of money short in the market. I just don't like the mind frame it puts you in, right? As soon as you go short, next thing you know, you're like, China, go attack Taiwan. Something bad. You're wishing bad things for you to make money. I don't like that mind frame. I would rather be much optimistic, never short the market. That's why I keep a long-term account. It stays invested on positions I like over the next 10 years. And I add to them every pullback. And I have a trading account to swing the trades and take basically really capitalize on the swings in the market. The swings in the market, take advantage of them. So this is Viper Energy Partners. Not a whole lot going on there, but once again, if you would have bought when it's oversold, even though it's real close to that 200 and it's barely swung over it, you probably would have locked in 10% in 10 days when it hit overbought, and now it's one of our biggest losers. So the day was a great day in the market overall. I hope everybody made money. I don't want to kind of go over the market again. I do that on my weekly analysis, but ladies and gentlemen, be careful out there right now. A gap up. I mean, this broke a trend line. So did SMH, which we already deleted that trend line. And it gapped up, which usually gaps carry momentum, whether they're up or down. But personally, I'm not a buyer there. I stopped buying breakouts a long time ago. Had a lot of success, but it wasn't optimal for me. I had better success doing what I do now, what I got in the books. I used to scan for nothing but breakouts and buy breakouts, and you wouldn't believe how many false breakouts you see. You see way more false breakouts than you see real breakouts. Haven't done it in quite a bit of years anyway, so things could have changed. I doubt it. And we can go through that and do a whole video and check what I used to do, and that's what I'm doing now. Come home from work every day and check every stock chart, biggest winners, biggest losers, to see if my strategy would have me in that position. I would check. I mean, there's been weekends where I sat down, I've looked at every stock chart from A to Z, and I've put every indicator on it from A to Z. I've been doing this for 23 years, so one thing I've learned is keep it simple. First 15 years, I spun my wheels, lost a lot of money, made a lot of money, but I was never really tweaked it and got it perfected to the point where I'm happy, I'm satisfied, it's doing really well for me until a while back. And this is the strategy I use. So, ladies and gentlemen, that is the biggest winners, biggest losers. We can look at, man, that would have been a nice win. I do like that chart. That chart is really, really nice. Be watching out for this next time it pulled back. I got you 12% in 15 days. Maybe, do some DD in it. Dell we've called multiple times. Every oversold run, really. So pay attention to those, ladies and gentlemen. Learn how to read a stock chart if you don't already. X Steel, I think we just covered that recently on that pullback, which I know we did. And a lot of money to be made out there, ladies and gentlemen, and just real companies that's making money, paying dividends, doing what they need to do. And you can capitalize on these swings if you know what you're doing. Just stop trading trash and stop wasting your money. Otherwise, ladies and gentlemen, I'm out.